Hey everyone, welcome. How are you? Good evening. Thanks for coming. We'll just wait a few more minutes here and let a few more people pop on.
How we doing there, Teresa?
Good, Laurent, how are you?
Good.
Just checking my messages to help people that are trying to get on here. Hey Kathy,
Hello.
how was your trip?
Oh, it was good. Really good.
Good, good. Hey Rod, how's it going? Just still letting people in here into the waiting room and then we'll get started. Hey Nicole, good to see you. I think most of us are from Alberta. Is it raining everywhere where you are? Because, boy, we've just been getting rain all day here.
Looking out ugly down south here in Nanton, but so far, no rain.
Oh, boy, we've just been pouring all day. This is just nonstop pouring rain here.
Wow.
You guys need to move to Victoria. It was a beautiful day today.
Oh, that's where we went wrong. Oh, all good, Rod. Not everyone likes to eat on camera.
How was Fort St. John, Nicole, today? Raining?
It's raining today, yep.
Oh.
All right, guys. Well, I think we'll get started here. I'm just going to double check that I am recording because last time I believed I was recording when in fact I wasn't. Well, welcome everyone. Thank you so much for hopping on tonight. We're all excited to be here. I know for me, it's been a great pleasure to be able to work directly with Patrick Kenney. I know a lot of you know who he is and you've maybe learned from him in the past, or you still have been learning from him recently with like his $5 a day stock program and stuff. But it's been really cool to be able to work with him directly. I've been learning from him since November of 2019. So it's been a really cool journey. I met him once when I was in Phoenix and I stopped by his office and went outside and played some pickleball in the scorching, in the scorching Phoenix heat. But yeah, it's been very cool. He just recently moved and partnered up with a company called Zinrai, which we're going to introduce you guys to a bit, but basically a financial education company that teaches. So teaches in the stocks and options, but there's also crypto, there's also Forex. There's actually like more stuff like e-commerce and things like that as well. So the very cool company, a new company, only been around for a couple months, but ran by people who have been in the industry for a long time and know how to do things right. So we're really excited. So I will turn it over to Patrick. I'll make you a host here just in case you need to be one to share your screen. But yeah, super excited to have Patrick here with us tonight. It's nice of him to give up some of his time to come and introduce you guys to what he has been teaching recently about selling options. I've only been doing it for, I guess, just over a month now, but it's been a very different type of trading than what I've done before, way more peaceful and calm. So a refreshing change.
Awesome. Thanks for having me. Peaceful and calm is not usually the words I hear from trading. So that's interesting. Guys, I'm excited to be here. If you guys do have webcams, make sure to turn them on. I like the engagement and get to kind of get a feeler of whether or not you're understanding concepts or not. But if you can't put them on, all good. Just grab your keyboards for the chat box tonight. The agenda is just to give you guys like an introduction to how to sell option contracts. Before we begin that, though, I'd rather just take a little poll. Just type in the chat box if you've sold option contracts before, yes or no, in the chat box. Give me an idea of kind of what that looks like as we get into that. All right. No, no, yes. All right. So little mix. That's good. We'll keep it pretty basic tonight. Nice and slow, but catch you guys up to speed on this. And then we'll just kind of bob and weave our way through it and then feel how you guys are doing, if that sounds fair to you guys. Just briefly, I know she already just mentioned it, but I'm from the US. I live in Arizona. I'm originally from Montana, actually, so I always feel like I can relate to Canadians because it seems like everywhere I go, there's some sort of Canadian license plate as I drive around Montana. And I moved to Arizona back in 2018, right after college, just getting out, new career opportunities, getting more people. And I live in Scottsdale, which, if you guys didn't see in the news, is now there's more millionaires moving to Scottsdale than any other city on the planet other than one city in China, more than Dubai, more than Miami, more than London. And I just wanted to be around the fire. I think your environment is a big deal. And if you live in a slow-paced town like I used to, it held me back. It really did. And ever since I moved to a more fast-paced environment, it helped me quite a bit. But everybody's got their own agendas. And what I can tell you is whether you live in a slow-paced town or a fast-paced town, when you sell options, it doesn't matter what pace town you live in. As Teresa just said, it might be called even peaceful. Maybe that's for her. It's not peaceful for me. But it is at least easier than trying to day trade currency or crypto or stocks or something like that. So tonight, that's what we're going to teach you guys to do. I always start this training by just saying a pretty broad statement, but put in the chat if you believe this. Most people think the only way to make money in the stock market is to buy low and sell high. How many of you guys at some point, or maybe right now, believed, okay, you got to buy a stock at $100, sell it for $200, you got to buy low, sell high. That's what we've been told our entire lives. But today I'm going to be showing you and teaching you that there is another way. There's a different way to approach the markets where you can make money from stocks that you do not own. You can make money from stocks that you do own. So what I'm saying is we can make money from a stock we don't even own. And tonight I'll teach you how to make money from a stock we own, like passive cash flow, almost like a dividend, but it's not a dividend. Imagine making a dividend from a stock that doesn't pay a dividend. Is that even possible? Well, not a dividend technically, but getting paid every month in option contracts? Yes. And that's what we'll teach you to do tonight. So you don't need to know how to predict direction. You'll see here we won't predict direction. You don't need to be right on timing. You don't even need to own the dang stock. So if, God willing, everything plays out how I think it'll play out tomorrow morning, I will close a position on United Health, hoping around $400 in profit, and I don't even own United Health. And tonight I'm going to show you how is that even humanly possible, because when I say that, it sounds taboo, right? It's like, what do you mean you don't own it and you can make money from it? You just need to learn how to sell options and sell them the right way. So I'm going to give you guys some just some definitions. If you're taking notes, the green box is definitely important. The first statement you need to learn is premium. Premium is, it's my favorite word in this training because premium means the money that you're making up front. Premium is your immediate income. So when I say I made $100 premium from a stock, what that means is I made an immediate check from that stock. And I'll explain how that works in the next 5 minutes. But premium is what we're making in income on a stock. That means that we get paid before anything happens. We're the first people to get paid on every transaction. We get paid before every single person in the market when we sell an option contract. We are the ones setting our own terms. We're saying, hey, I only want to make trades that I have a 90% chance of making money on, or an 80%, or 70%. And as you can imagine, it's like a sliding scale. If I'm going to take a trade that I've got a 90% chance of making money on, I'm going to make less money than taking a trade that I've got a 60% chance of making money on. It all is up to really my risk protocol and what my financial goals are in the markets. So I'm going to start by giving you a broad example, then we'll boil it down to more simple terms. But I'm going to actually just hit you with an example right off the get so you can try to understand this. Who's heard of Airbnb before? Who hates it now because all their fees and cleaning BS and all that crazy stuff now? What, me? Anyway, Airbnb, I think it used to be a lot better, but it is a stock. It is trading fairly high. Let's say Airbnb, this is not the current price, but let's just pretend that Airbnb is currently trading at $132. Now, on that note, I'm going to actually go back here. There's 4 specific ways that I could buy this at $132. There's only 4 ways. I could either A, wait and stare at the chart. That's it. Just sit and stare and wait till the chart hits whatever I want to buy it at, say $120. So I could wait and see, we'll call it. Number 2 is I could set an automated alert, some sort of system from a piece of software that tells me, hey, when Airbnb hits $120, then I'll buy it. Number 3 is I could set what's called a buy limit. Who's heard of a buy limit before? This is a buy limit. If it's currently trading at 132, that's current price here, and I want to buy it at 120, I can put into my broker what's called a buy limit, which means if the price drops, it'll automatically buy however many shares I want at 120. It does it automatically whether I'm not there. Doesn't matter if I'm there. It's automatic. So that's the 3rd way. Or the 4th way is doing what I do. It's creating a conditional offer through selling option contracts. That's all it is. So how does that work? How do I do that? What does that look like? I will offer the broker to buy Airbnb at $120, which is $12 below market price. And here's what happens when that happens. I'm doing what's called selling a put contract. When I do that, I get to collect a guaranteed check up front. $64 in this example is premium I collect today. I'm collecting that money up front, and I'm being paid that before anything happens. That is called being paid on a stock you don't even own. You are being paid to buy it at 120. Now, if the stock never hits $120, guess what happens? You keep the $64. It's free. Enjoy. If the stock drops to 120, you buy it at 120, a price you already wanted to own it at. Once you hear this for the first time, you're like, why didn't I buy all the stocks ever in the history of my life this way instead of just buying it? Well, you could have. You just didn't have the knowledge, or you didn't have this information. So every time I want to buy a new stock, for instance, this week, $55. I'll give you a real example. DocuSign. I want to buy it at $55. Instead of waiting for DocuSign to drop to $55, and I don't even know if it will, let's be honest, I just started selling put options. Last week, I did this on United Health. Instead of waiting for it to drop, I sold a put option. Guess what I got paid to do that last week? $530 on just that one transaction. That was my contract. Last week alone, we collected over $700 in premium. All of this, by the way, can be substantiated with the broker that you'll see me trade with in just a little bit. We'll actually go through some of these. That is what we call selling a put. Now, to take a backtrack real quick, some of you guys might have heard this term before, puts and calls. Who's heard of puts and calls before? Scary, huh? They're trading options. They're buying puts and they're buying calls. Let's boil this down in what I call Patrick terms, simple terms. When you're buying a call option, it means you believe that the market is going to go up. Anybody know who Nancy Pelosi is? Oh my goodness. I have a t-shirt of her. It says it's like a Time magazine mock-up, and it's fake, but it says, and people give me looks when I wear it, it says best trader of all time. She's like the queen, as you all know. Did you know that she doesn't actually, majority of her stock transactions, she doesn't buy stocks? She buys call options. That's how she makes her money. Now, here's why I want to share this. For every buyer, there's got to be a seller. If Sandra wants to buy a home, does somebody have to be willing to sell her a home? Yeah. And by the way, who's the middle of that transaction? A broker. In the stock market, it's the same thing, my friends. We've got a buyer, a seller, and a broker. So for instance, I want to talk about puts for a minute. If you're going to buy a put, if Morris is going to buy a put, it means he's betting the stock is going to drop. Okay, that's what he's going to do. So he's going to buy a put. It's potentially downside protection for him. Maybe he's owned the stock for years and he just is worried it's about to have a hiccup. Maybe it's new leadership. So he decides to buy a put so that if it drops, he can cover some of his losses for pennies on the dollar. That's why people buy puts, generally speaking. But pause. If Morris wants to buy a put, he can't just what people forget is he can't just magically buy a put. Someone has to be willing to sell him that put. And that someone is not the broker, contrary to what many people think. The broker is just middleman. You are the seller of the put. In this example, Morris bought the put. Guess who sold it? Me. So let me show you this as an example. I'll kind of draw this up. There's a buyer of a put contract, so I'll put BP, and they're betting that the market will go down. In the middle here, there's a broker. Any broker. A lot of you guys are from Canada, so take like Interactive Brokers as an example, or Robinhood in the US, or Charles Schwab, or the list goes on. A broker. Then there's the seller of the put. So the buyer of the put, what do? If they're buying something, what do they have to do? They pay money. So they pay money. Who does it go to? The broker. The broker then brokers the deal. So the buyer pays, in the example we just talked about, the buyer paid $64. And he said, hey, Airbnb is currently at $132, and I think it's going to go down to $120. So he, in order to make that bet happen, he had to pay $64. Does that make sense? The broker then says, okay, great, let me go find you a seller. The broker finds Patrick Kenney, finds me. It then sends me upfront $64 for creating the contract. I simply put, Morris basically sends me $64. The broker's just the middleman. They take, in many broker cases, anywhere from, in the case of Robinhood, 4 cents all the way up to, a couple dollars. Obviously, brokers make money middlemaning these transactions, but the majority of the money is going to go to me. Now, why does that happen? Well, me selling the put guarantees Morris that if the market indeed does drop to 120, he is going to get paid. Now, how does that work? How does he get paid? Well, I'll tell you how he gets paid. Oops. I am writing the contract at 120. I am guaranteeing that I will buy the shares of that stock at 120. So in that example, if the market were to drop to 120, now I buy the shares. That right there gets, guess who? Morris paid. Because now I have purchased the shares of a stock. All we are doing is this down here 95% of the time. I've done this 60, 70 times this year. I've only had to buy the shares 3 times. So 67 out of 70 times, or whatever it is. I don't know the exact number. It's somewhere around 70. But only 3 times have I had to buy the shares. So the other 67 times, guess what I've done? Collected a check. Collected a check. Then I collected a check. Then I collected a check. And I'm going to talk about this a little bit more, but I just want to get you guys as kind of warmed up here so you kind of get in the mode of what we're talking about. You can do this on anything. You can do this on Apple, Google. You can do this on the S&P 500. You can do this on iBit, which tracks Bitcoin. You can do this on anything that you desire. If you have a stock in mind right now that you're interested in buying, you could do it on it. Let's do another example. Let's take trading out of it for a minute. Let's break this down for beginners. This is very similar to a garage sale, okay? I have on my screen Sandra and Morris. I'm not trying to pick on you two. You're just on the side of my screen, so you're getting picked on. So Morris is getting picked on big time tonight, okay? Morris has cool-looking headphones on, but he got a new pair, so he no longer needs them. So he's going to hold a garage sale with a bunch of stuff, right? And so he holds a garage sale. There's the headphones. And Morris, type in the chat box. What do you want to sell? What would you sell those headphones for? How much money? $100. All right, perfect. So we'll walk through two different examples. I actually think I used $100 as an example here. Did I? I did. Morris, we're going to pretend I didn't say that. It's just going to be a TV, okay? So you have a TV. Morris is selling a TV. So Sandra, you walk up, you're on a dog walk or whatever, you're just walking around and boom, you come across his driveway and you see a TV. You're like, I've needed a TV. You walk over and it's got a little sticker on it. It's orange and you look and it says $100. You scratch your head. I don't know. I don't want to pay $100 for that TV. So you walk up to Morris and you present him with a conditional offer and you say, I'll give you $70 for the TV, Morris, guaranteed in writing if you don't sell it by Sunday. So that you can guarantee yourself that you get rid of this TV. I'm going to guarantee you $70, Morris. But for that guarantee, Morris has to pay Sandra $10. Sandra collected what's called a premium of $10. Now she has an expiration date. Every contract does, an expiration date of Sunday. So now what happens is, if Sandra comes back and Morris says, hey, I sold it to Brian. Sandra says, no problem. Sandra leaves and she kept $10. Didn't have to buy the TV. On the flip side, comes back, the TV's right there. Yeah, couldn't sell it. She says, perfect. I'll buy it for 70, but she still keeps the 10. So now really, what was her net cost? 60. That, my friends, if you can understand what I just said, that's all we're doing in stocks. We're creating conditional offers. This is all up front. This is not hocus pocus. This is not hidden from us. We know exactly how much we'll get paid. We know exactly when the expiration date is. We know exactly the odds of us having to buy the stock are. If you want to own the stock, you want a higher odd of buying the stock. If you don't want to own the stock, you want a lower odd of buying the stock. It's simply that, it's that simple. The only thing I would write down in your notebook is you never do this on a stock you wouldn't want to own in the first place. That's the only time I see people have trouble with my strategies. Is they get the itch. They see this for the first time and they say to themselves, I just want to do this all day, every day because I can make a bunch of money. But then they have the uh-oh moment. I'm going to have to buy some stocks I don't even want to own. You got to want to own it. Like in that moment, Sandra really needed to own, like she wants to own the TV. If she didn't want to own the TV, she shouldn't make that offer. Okay? That's what we do every day with stocks. We don't chase them. We come up with price points we would actually want to enter them at. And we just start collecting premiums. And we could collect premiums for the next 3 years and it never hits our price. That's okay. We just continue to collect a check. We do not need to time the top or the bottom. We just need to learn how to sell the contract. You know somebody who bought the top and got wrecked. Everybody does. Maybe it's you. You also know somebody who's made money and doesn't even know how. Our job is to find stocks that are in good financial positions, under fair market value, and write contracts on them. Put a number 1 in the chat if this is getting exciting, if this excites you a little bit. Put a number 2 in the chat if you would like me to head over to trading screens and broker screens and actually show you what this all looks like. All right, let's do it. So what we're going to do, no more slide deck. I just wanted to introduce you to it. We're just going to jump over, and I'm actually going to have all of you do something for me. Type in the name of a stock that you like. Maybe you want to buy it. Just anything. Doesn't matter. Just give us some ideas. All right, let me read. Apple, NVIDIA, Samsung, Amazon. All right, all sorts of stuff. Allah. All right. Let's start with ALA. Now, oops, sorry guys. I'm a trader at heart, so my chart's going to look weird for a second. Bitcoin just hit 124,000, and I have a very large trade on the line, like 110,000 net floating profit right now. So I'm in a little bit of a, to say the least, my brain's all over tonight because I'm trying to make the right decisions right now. So my charts are all messed up. All right. So let's see if there's even an option chain for this, given that it's not on the NYSE. Let me look. All right. We won't be able to do that one because it doesn't have an option chain. So we can't do that one. Let's look at the next one. Let's look at crowdsource. Let's look at crowdsource. And I think what's crowdsource's ticker? Do you know? Oh, you're talking about CrowdStrike? CrowdStrike. Okay, yeah, perfect. Let's talk about CrowdStrike. So let's lay the foundation briefly. CrowdStrike is currently trading at $432.12. Okay. Before I even get into how to sell an option contract, I want to teach you guys fundamentally, like, do I want to buy this stock or not? How I do it. Now, this is up to interpretation. This is what's called strategy. This is how I've made money, but you could do it however you want. The reason I bring that up is basically the question, is $432 a fair value for this stock? Like, am I overpaying for it? Is it a deal? And a lot of times, you know what people base it off of? They say, well, it's not as high as it once was. And that's their entire thesis. But the challenge with that is sometimes a stock is for good reason not as high as it once was. Maybe they've gone through a massive lawsuit. Maybe they've switched out to a brand new CEO. Maybe fundamentally they're just not selling as many products. Maybe they're an old-time product in a new AI age. You get what I'm trying to say? So the first thing we need to do is we need to figure out if this is a company that's even worth our time. So what I do is I use Yahoo Finance. So I'll go to finance.yahoo.com and I'll put in the ticker CrowdStrike. And I have a two-pronged approach. The first thing I do is I dissect what I call the blood of the business. Now, what does that mean? That's its financials. How I describe this is if Morris were to go into the doctor office today, just open his arms up and just say, tell me what's wrong, doctor, he would laugh at you. That's what most people do by looking at this. They say, I'll buy it. It's down off the highs. I'll buy it. But that's literally what people are doing. They're not looking at the blood pressure. They're not taking blood work. They're not taking the weight, the height. They're not taking into account diet, nothing. In stocks, we have to look, is the blood work actually good? So what's the blood work, if you will? I pardon my metaphors. It's just how I like to teach that. Financials is what I'm going to click on. And the first thing I like to do in any business, sounds simple, but the first thing I like to do in any business is I like to understand, does the business actually have revenue and is it growing? Pardon everything else, debt, profit margins, everything else. Do you guys think revenue is important for a business? Certainly. So all I do is I just pop in here and all I do is I literally look at the right side, which is going to be the furthest out date, 2022. And then I look at right now, TTM, and I ask myself, is now bigger than what it once was? Yes or no? Is 4.1, in this case, it's in thousands, so this is billion, is 4.1 billion greater than 1.4 billion? Yes or no? Yes. I ask myself only 5 questions. That's the first question. That's called, is revenue growing overall? The second question I ask myself, is revenue growing recently? So is this number greater than this number? Yes. So what I know right now, outside of everything else, top line, they're doing fine. They've got revenue coming in that's better than what it once was in 22, and now they also are better than they were last year. That's a good sign. They're still growing. Even with all the tariff troubles, all the potential shutdowns, all this and that, all the speculation of the economy's going to pop, it's in a bubble, all that stuff, it's still growing. Then what I do is I get out of the income statement and I go straight to the bottom line, cash flow. Would you guys like to invest in a business that is spitting out positive cash flow every year? I don't invest in businesses that are not spitting out positive cash flow. I don't think Sandra is going to go try to buy a rental property that's going to cost her $3,000 a month to hold. She's probably only going to try to buy a rental property that's going to spit her out some cash flow, right? So I look at this. So I go to the cash flow tab, and the first thing I ask myself, all I do is look at this number. Is it positive? Is it positive? Yes or no? Yes. It is currently spitting out positive cash flow. That's the third question. So I have 3 yeses. The fourth question out of 5 is the cash flow growing overall? Yes or no? Is this number greater than this number? Yep. And the fifth and final question, you probably guessed it, is it growing recently? Yes or no? In this case, the answer is no. 1025 is smaller than 1067. Okay? So we had 5 total questions. Let me review it real quick. We said, is the revenue growing overall? Yes. Is it growing recently? Yes. Oops. Then we went to cash flow. Is cash flow positive? Yes. Is it growing overall? Yes. Is it growing recently? No. So we have 4 out of 5. Now I have a very simple grading system. It's just like in school. 5 yeses, 4 yeses, 3 yeses, 2 yes, 1. Okay? 5 is A grade, B grade, C grade, D grade, F grade. I want to invest my money in A and B grade stocks. This is a B grade stock. However, I then have a caveat rule to this, Sandra, because this is your request. I require A grade stocks. I want to get at least a 25% discount, meaning it's got to be off the highs 25%. B grade is 45. C grade, 65. D grade, 85. F, forget about it, I don't touch it. That's fundamentally, in 5 minutes, my investment core thesis surrounded by individual stocks. Now, the majority of my wealth sits in index funds. I don't even pick stocks because the majority of people cannot outperform the S&P 500. That's facts. So the majority of my wealth sits in long-term index funds, but then every so often I like to find little things like this. Now, that we know it's a B-graded stock, the first thing we need to do is mark up, well, where is that 45%? So, and by the way, where is that from? It's from the all-time highs. So I'm going to come over here and I'm going to measure that. And it is currently 16.37% off the all-time highs. That's how deep it is. It's a B grade. We need it to be 45, remember? So in that premise and in that principle, I'm not willing to buy CrowdStrike until about $284 a share. However, then I add a secondary checkpoint, a secondary filter, a secondary protection to ask myself one question and one question only. Is $432, just as it stands, a fair value or not? There's a gentleman, some of you guys might have heard his name before. His name is Warren Buffett. He's followed this exact formula, the Benjamin Graham formula. Benjamin Graham actually took it from him. But he's followed this exact formula. You guys can go read Benjamin Graham's book. It's a phenomenal read. He's followed this formula for all of his life. He does not invest in businesses, period, end of story, that have a fair value lower than current price. And so how do we find the fair value? Well, what I've done is I've boiled down all their work. Oops, I think I'm on the wrong Gmail. One second. I've boiled down all of their work into one calculator. And all I have to do is plug in two numbers. I'll show you where to find them. Teresa will kind of tell you about how to find the calculator. All I got to do is plug in these two numbers, EPS and an earnings growth estimate. The reason I use Yahoo Finance is they generally have the most pessimistic earnings growth estimate, which is important. I want to see pessimism. I don't want to see super optimism because then the fair value shoots out of whack. So the first thing I need to see is EPS of CrowdStrike. So I go down here. I go to summary. And then see where it says EPS? Negative 70 cents. Red alert, red alert, red alert. We can't even value a stock with a negative earnings per share. You're not going to see an investor like Buffett himself go all in or go aggressive in a stock that has negative EPS. And so right now, it's not something that we can even give a fair value to. Does that make sense? Now, for the sake of discussion, what I'll do is I'll grab just a different stock. I'll grab Dollar General. This is actually something on my plate, on my docket right now that I like. And I'll just show you guys the fair value of this one so you can kind of practice this. So what does that say, EPS? 524 a share. So what I do is I plug in 524. Okay. And then the next thing I do is I need to find the growth estimate. How I do that is I go to analysis. When I go to analysis right here under growth estimates, see where it says DG 11.34 next year? That's what I base it off of. 11.34. So now what I do is I go 11.34, enter. What does that say? 163.38. The fair value of Dollar General is 163. It's currently trading at 115. Are we under fair value? Yeah. So it's like being able to know, okay, I'm buying a house for 200,000 that's actually worth 270. Would you consider that a good deal? That's exactly how we invest in stocks. Now, I'll just run through the financials really quick so you can see it again, and we might actually use this one for our option example, and then I'll show you some broker examples. Right here, are we growing overall? Yes or no? Yeah. Are we growing recently? Yeah. Is cash flow positive? Yeah. Is it growing overall? Yeah. Is it growing recently? Yeah. We have an A-graded stock. DG is an A-graded stock below fair market value. You can see I was already marking this up today on our live training. And it's 55% off the highs. It meets all of our criteria, and this is a stock that I think is worth considering ownership of. Now, here's what most people do. Most people say, okay, I want to own it. Then what do? They buy the shares. What we do is we go into this world. We type in DG, and we look at what's called the options chain. We first determine what price we want to own it at. Now, that's not another can of worms, but that's another discussion of where we want to own it at. But generally, we use what we call price structure. Who's heard of price structure before? If you've never heard of price structure, think about it like this, or look at it like this. Price generally likes to get caught up on the same points. You see that? So look at DG up here. Look what happened. Up, stopped, came back down. Then finally it broke through that yellow box. Look what happened. Down, 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 bounced. Then it came down here. Down, 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 bounced. Then it broke through, up, had trouble, broke through, bounced. That is what we call a level of support. Now, why I bring that up is those are the levels we always usually are selling our contracts on. We're trying to find a price point which makes sense. So let's say, for instance, we're like, hey, look, I'd be willing to buy this at $105, currently trading at $115, $105 per share. You could do one of four things. Let me reiterate them. I could A, just stare at the charts like a madman for the next 3 weeks. B, I could set an alert at 105 to email me or text me from some sort of software. C, I could set a buy limit on my broker. Or D, I could do what I do. I sell a put. Now, when I go over here to DG at 105, all I got to do is go to the chain. Okay? And I can filter it by what's called strike. Strike is a fancy term of saying that's where you want to buy it at. So I click strike, and guess what? 105. Now I'm going to pause for a minute. Right now, some of you guys are completely overwhelmed. You see all this. Say this in your brain. It's not hard. It's new. It's okay. It is not hard. It's new. So you look at this chain with all these numbers. Who is intimidated? Put a number 1 in the chat. You're like, oh my God. It's crazy when it's brand new. I remember the first time I saw it. No chance I'll be able to learn that. It's not hard. It's new. Here's what we look at. We have our strike. That's where we are willing to buy the shares, 105 bucks. The next thing is our expiration date. Remember in the garage sale example, we said by Sunday? That's all this is. What day do we need to buy it by? We choose. It's our choice. Then, this is the good one. Bid stands for premium. How much money do I make per share to do this? Look at that. Now, in options, we trade one contract. One contract is 100 shares. So what that means is if we did September 5th, that'd be $148. Is everybody following that? 148 times 100. And the last but not least is delta. That's all we look at. That's all my eyes are looking at. What's delta? Well, delta is in decimal format of a percentage chance that you actually will have to buy the shares. So August 29th, you have a 17% chance you have to buy the shares. September 12th, you have a 19% chance you have to buy the shares. Okay? Does that make sense? Now, the next question that will obviously arise is how do you determine what contract do I take? Like which one makes the most sense? Well, when you're writing contracts, what I want you guys to think about is what you're doing is you're not buying the stock right then. What you're doing is your broker is what's called collateralizing. Who's heard of a collateral on your loan? Your broker's collateralizing your money. So when you write the contract, you're saying, I guarantee to buy the shares at $105 in this example. The broker doesn't take your money from you. They put it in like an escrow account. And so when they do that, you need to basically figure out if that money is moving to an escrow account, is it better off sitting in that escrow account or just sitting in a high yield savings or a money market fund? How do I determine that? Well, I have to determine what the ROI is. Type in the chat box, what is your guys' money currently yielding you right now in money markets, bonds, or high yield savings? What is it getting you guys right now? Anybody in the chat box care to share? Jen, your money's getting you 13% in where? You tell me I'll retire for the rest of my life. Please. Too good to be true. TFSA segregated fund with zero downside risk. No downside risk, fully insured. Yeah, guys, everybody should just retire if you can make 13% a year for the rest of your life. Most of us aren't that lucky. Most of us are making about what, 4% in the bank right now? Ish. I'm making 4.5 on some, 4 in the others. Reason I bring that up is that number is critical to your strategy. It's going to change while the market goes up and down. It's going to change while interest rates go up and down. Remember COVID? You got like 1% or 0.5%. What you're trying to do is you're trying to say to yourself, if I collateralize this money, is it going to beat my 4%? Yes or no? So how do I do that? Well, I built out a calculator to help me do it. And I'm going to basically just split my screens here so we can do both at the same time. All right. So what I'm going to do is I'm going to put in DG, DG, DG. I'm going to consider 3 contracts. And these are all going to be fresh numbers. So I'm going to assume that I'm going to buy it. I'm going to sell the contract, tomorrow because the market's not open right now. The next thing I'm going to put in is what's the underlying price of Dollar General. Right now, as you can see on the very top of my screen there, it's $115.79, okay? All right. The next, I put in my deltas. So I'm going to consider these 3 options right here: September 5th, September 12th, September 19th. Take your notes out if you're taking notes and write this down. 30 to 45 days. That is the expirations that I like to run in. I like to set expirations of 30 to 45 days. Here's why. It gives me a runway if things go south. It gives me time to be nimble and move. It gives me time to even change my contract, which is possible, by the way. So I'm going to do these 3: September 5th, September 12th, and September 19th. At face value, would you guys know which one's the best? Yes or no? It's hard. You could say, well, Patrick, you're going to make $1.86 at September 19th, but you got to take into account the amount of time it takes to get there, right? So all we do is we plug it all in. So September 5th is an 18 delta, September 12th is a 19 delta, and then September 19th is a 20 delta. So again, 18, 19, 20. I'm going to put those deltas in my calculator. Okay, then my strike price. Where do I want to buy it? 105, 105, 105. My expirations are September 12th. September 12th. September 19th. And September 26th. Everybody with me so far? Just plugging and playing some numbers. Next, I got to put in my bid price. Everything in yellow you have to edit. Everything in red is done for you. So the last thing I got to edit is this, bid price. So $1.48. See that? 148. Next one right here, 167. Last one, 186. Okay. Voila, we now have annualized returns of what that collateral is making us annualized while we wait to buy the stock. Is that better than your bank account? Now, if it is, the answer is yes, obviously. Then the next question is, which contract is the best contract to take? It's objective. It's not an opinion. It's black and white. Which one is it? It's that top one. It's the 12th because it's got the highest ROC, return on collateral, 12.25%. That is why I love selling options, because while I'm waiting for stocks that I want to own, I'm able to get higher than normal returns in the meantime. Imagine being able to make 12% on your money. You guys would laugh at me and say there's no chance. Well, like I did to the one comment, right? And now you can say, well, while I wait to have Dollar General, I'm going to make 12.25 return on that collateral. And then once it expires on the 12th, let's say you didn't buy the shares, you get your money back and you do it again. But now, really quick, I want to teach you guys something called the wheel method. So what is that? What's the wheel method? What am I talking about? Well, what if you get filled? Does that occur to anybody yet? Like, what if I have to buy the shares? So this is called the wheel method. You've got your money. Right now, a lot of you guys, I think everybody's always looking for the best place to put their money, including me. So you've got this money. Then you have now learned how to find a stock that you want to buy. What is its grade? What's its fair value? So you find the stock. So you sell a put to do that. That's what we've learned today. Then you have, say, Dollar General. Now, if you don't have to buy the shares, you just make the money right here when you sell the put, and you get more money in your bank or your broker account, and you do it again and again and again and again and again. Is that clear? But what if that doesn't happen? What if now I'll put a pie here, sort of to represent ownership? Your strike price gets hit. You now own the shares of DG at 105. What do? You can collateralize your shares, my friends. Instead of collateralizing your money, you're now collateralizing your shares. And now you're doing the exact opposite of what we've talked about. And now you're selling calls. Someone in the market is buying a call, betting on that stock to go up. But in order for them to make money, guess what? Somebody has to be willing to sell the stock if it hits a certain price. And so now I can collect a check selling those calls at a price I would like to sell it at. And I can do this repetitively until that happens. You know, I'll give you guys a great example, and we'll actually go to the broker to show you the example, but it's on SoFi Bank. Who's heard of SoFi? A lot of markups going on right now because I'm in the middle of a trade here, but SoFi, when it was getting drilled right here, I started selling puts aggressively. I ended up buying shares of SoFi at $13. So I had to buy the shares. But since then, all I've been doing is selling calls, and I'm still selling puts to generate cash flow while it goes higher. Right now, I have a contract at 27. I collected $35 premium for August 29th on that. That was about a month contract, by the way. Why is that important? Well, do the math on that. 1 month, $35. There's 12 months in a year. That's $420. And I bought 100 shares at $13. What was my investment? $1,300. Where else are you getting a quality stock with a 32% annualized dividend? Now, it's not a dividend, it's an option contract, but isn't that a miraculous thing? Isn't that insane? So I'll show you this in a broker so you can see the paper trail here. This broker I trade live in front of everybody every day. We're on a mission to build this broker up live. So year to date, we're now up almost 12% on the year building this. We started with about 45,000 US. We're up to 51.3 this year. I do this live in front of you guys every single day, 4 days a week, by the way, so you don't miss any of these trades. Check SoFi out. Look at this. So you can see the paper trail. So this is the trade I just told you about, but look at this. So here's what happened. On January 2nd, I sold a 4 option order on SoFi. What did that mean? I sold 4 puts at the same time. I sold a put at 11, 11.50, 12, and 12.50. Do you guys think I wanted to buy the stock? Yeah. I was selling puts, but in the meantime, look at the cash I was collecting. I made $142 just for doing that. Then the next month, look what I made. Another $54 to sell an 11.50, 12, 12.50, and 13. Guess what got tagged? My 13 got tagged. I'll show you where. Right here. It says assignment. Okay? That's equivalent of Sandy had to buy the TV. Or Sandra, excuse me, had to buy the TV. That's what that means. I had to buy 1 contract worth of SoFi because that's the quantity that I sold. I had to buy 1 contract worth on March 7th. 1 contract is 100 shares, again, to remind you. So $13 share price, $1,300. Do you understand the math there? Then 1 week later, March 14th, I immediately sold a call, generated cash flow. Then I said, well, I want to still own more shares. So look what I did. I sold more shares, I sold more puts, generated more cash flow. Then I sold more calls, generated more cash flow. Then I sold more calls, generated more cash flow. Then I sold more puts, generated more cash flow. And then I bought a put back to close the contract early here, if you're wondering. Look right here. What did I do? Sell my last call. That was $27, generated more cash flow. The reason I show you this is this is an example of the wheel strategy where am I at? Right here. Look at that. I bought it at 13. It's currently worth 23.96. That's my equity gain on that one trade right there. That's the wheel. I'm selling puts on stocks I want to own and collecting cash until I own it, then selling calls to collect cash until I sell it at a profit. I'm doing this across the board. Right now, look at these examples. Here's, actually, shout out to Teresa. Teresa literally, SMCI was her idea in the live room. She literally found that trade in the money. Here's UNH. 370 on that one in the money. I mean, look at that. This one I sold on July 30th. This is recent. Look at the amount of money I made to write that contract. $531. This is real stuff. And so just a couple things, couple foods for thought here. At this point, there's always a few different questions. Number one is, what if I don't have the money to buy the 100 shares? What we do is, in that example, we trade put credit spreads instead, where we artificially create a buffer so we don't have to require ourselves to have as much capital. Long story short, even if you don't understand what that means just yet, what we are allowing you to do is do this with, say, 1,000 or two, instead of, in this case, I mean, when you think about this, this is a $250 put. So I had to collateralize, guess what? $25,000 to have this order work. Another question that, usually comes up is, how does and this is a U.S. related answer. So if you're in Canada, which I know most of you are, I don't know the answer for you, but how does the tax implications work? It's all short-term cap gains, generally speaking, on these contracts. I'm not sure how that's going to look in Canada, but that's another question that comes up. So yes, you could have smaller accounts. And I think the final big question that people ask is, how much time does this take? Because Teresa started this call with sort of a bang, kind of a cliffhanger, saying like, I'm calmer, more patience. And, there is that, there's a little bit of that. I'm not going to say there's not, there's still some stress, but this, I spend 20 minutes max. I teach. This is what I do for a living. So I trade live with this. If I wasn't teaching, I think I could boil this down to 10 to 20 minutes a day to execute, monitor, make changes, early exits, all that sort of stuff. The last thing that's so great about options is you can move your option orders at any time. So for instance, right now I've sold a covered call at $27 strike on SoFi. What that means in simple terms is, if this stock goes to 27 or higher by August 29th, I'm required to sell. Which, do you guys think I would care? I'm in major profit, right? But let's say I didn't want to sell. I'm able to buy this contract back at a loss, and on the same ticket, sell a new one at a higher price. That's called rolling the contract. I'll actually show you what that looks like visually, because it's the most beautiful thing with options. What I'll do is I'll show you visually what that would look like. So here's that SoFi. You can see here that contract, even though the price is going higher, I'm actually still in profit. You see that? Watch this. I go to view all options, and I sold a call, so I'd have to buy the call back. You got to do the opposite of whatever you did. So I would have to buy back my 27 call, August 29th, and it's always annotated on this is Robinhood I'm using, but it's always annotated by that little -1. So that's where you know that I own the contract. That's the visual. See the little -1? So what I'll do is I'll buy it back. I'll buy the call back, click. It's like an order at a restaurant. And then I can sell the call. I just click sell call for a later date at a higher price, say September 19th. Now, instead of 27, I could go up to, say, 28, and look what happens. I get now instead of 27, I'm at 28. So now I have a higher price. Do you guys all see that? I have a later date, and look what happened on the right side. Estimated credit. That's premium. I still get paid another $22 to do that. I get paid to get a better price. That's why I love options, because we can be nimble with this. We can move. We can jive. We can rock with the market. We don't have to be so, I entered at 28, or I entered or bought the stock at X, and I'm stuck. With options, we're able to move our contracts around by buying them and reselling them and moving them, allowing us to be more nimble based off of whatever our strategies and our plans are in the markets. Say, for instance, major headline came out, SoFi expanding, doing all this good stuff. Well, I can quickly say, man, I think it's going to pop in value. Let me switch the contract order so I don't have to sell it at 27, but rather I could sell it at 28. That's $100 in gain per contract because it's a dollar difference in stock price for 100 shares, $100. Last question that people ask at this point, and then Teresa's going to take over from here and show you guys a little bit of this and a little bit of that, is how to learn more. And everything that I do is inside of the Zenrai platform. The reason I partnered with them was it was harder to become an educator for their platform than get a mortgage, which is a funny joke, but it's true. It was something I could just get behind because I knew every educator had to go through the same thing, and I can trust that every educator to my left and to my right wants the best for their students and is actually doing what they say they're doing. Every trade we do together, I'm doing as well. We're all having to trade on these brokers as well. And we're not managing your money for you. You're doing it yourself. You're learning a skill set that you can do yourself. You don't have to pay someone to manage your money forever. Because that gets expensive, especially later in life. Some of you guys know that 1% on $1 million, that starts to become $10,000 a year. You're paying some guy to literally do nothing but hold your money in the S&P 500. So if you can learn the skills to do it yourself, you're saving yourself a great deal of money. So Teresa, unless they have any other questions, I'll hand this call back over to you so you can share with them how to be part of Zenrai. And what I'll do is we'll do this. Anybody that gets started with you, Teresa, or anybody that invited them today, we'll give them a special link to book a one-on-one call with me where we'll do an entire game plan to really map out their goals, where they want to go, what they currently are doing, and we can make sure that we get them on the right track, and we'll do that one-on-one private, just me and them. So, yeah, excited to work with anybody that's going to work with us. Teresa, I'll let you take it away.
Wow, that's awesome. Thank you so much. That's great. It has been very cool to be able to just like directly ask you questions over the last couple of weeks. It's been a pretty cool experience. So yes, thank you. Give some love to PK in the chat for jumping on with us tonight and giving you this introduction to selling options. And yeah, I will introduce you a little bit more to Zenrai. And the platform. So for anyone, like you said, if you get started tonight, tomorrow is still Thursday, so you could still catch him live one time this week. So this is what it looks like when you're logged into Zenrai. And so there's a bunch of different things so there's a live room where you can go in and you can watch the educators, and that's what Patrick Kenney is with Zenrai, as an educator. So there's a few different categories, but you find Patrick in the stocks and crypto section. And so when you come in here, you can see his schedule. Sorry, my computer is running awfully slow. But anyways, you can come in here, you can see his schedule of when he's live. So tomorrow morning, for most of the people on the call, we're in Canada. So if you're in Alberta, it'll be 9 a.m. If you're in BC, it'll be 8 a.m. for you. But you can see his schedule here for the week. And then they're all recorded so that if you can't attend, maybe you're working at that time and you can't attend, you can watch them recorded, and you can still get the same, like what stocks he's looking at, what strike prices he's looking at, and everything. Like it's not as fast paced as what most of us were doing before with Forex trading or US 30, where you still have time to look at those options and get into them later. Okay, so that's one option that we have. The other great thing is he has courses built out that you can watch on your own time. And so that's
Teresa, I'm gonna cut because I don't think you know this because I haven't announced it yet. I just added the execution module to the understanding options course. You'll see it there, showing how to execute on the brokers.
Awesome. Yeah, we've been waiting for this to pop up. So these are his courses that he has right now hosted on Zenrai. So you can come in and watch the Understanding Options course, Understanding Stocks course, and then he also has a Trading Mindset Mastery course as well. And yes, the length of this course just grew a whole bunch. So there's definitely some new videos in there. So you can come in and look at the curriculum and see all the different videos. And like earlier, he was showing you that calculator. So there's a calculator in here that you can get from him while you're taking the course. So I went through this a couple times, and after watching the course 2 times, honestly, like for me, the learning curve of learning this, I feel like it's simpler to learn, quicker to learn. The first couple days on his live room, I was like, oh boy, I don't understand anything. But once you've watched the course, it really starts to click pretty easily. And then there's other people's courses as well, that you get access to as well. Some people might remember Mike Citero. So he has courses in here as well in the crypto side of things. There's still Forex traders as well that you can follow. So there's lots of different options. There's also Zinrai Ideas. Um, so this is where they'll send you trade ideas. This is more like copy and paste trading, kind of for newbies while they're still learning. I've never really loved it that much because I always say, like, if Patrick gets hit by a bus, I want to be able to do it on my own, right? So, but there is that option here as well where you can copy and paste trades. There's also a really cool personal development program built into Zinrai as well called Zinrai Elevate. They have different 90-day growth tracks that you can go through. So like confidence, discipline, leadership, all sorts of different tracks that you can go through, and then books of the months as well, podcasts, cool things like that. So yeah, lots of awesome options that you can explore at Zinrai as well. As far as getting started, so that you have access to the platform, it's $250 to join Zinrai, and then it's $185 a month for your membership. If you are somebody that likes to share a good thing with people when you find it, if you refer a couple people, if you have 2 active customers that you introduce to Zinrai, then your monthly membership is free every month, which is pretty cool. Yeah, so that's pretty much it. If you guys have any questions, feel free to type some questions in the chat and maybe we can take a couple questions. Scroll down a little. I had seen a question earlier from Jed that's maybe more Rod. Is there a limit on the volume of puts and calls on a stock?
No, there's not a limit. As long as there's a buyer, then there's a bid. If there's a buyer, there's a bid. So if there's a buyer, the bid will show up. If there's no buyers, then there's not going to be any bid. And then you're only limited to the amount of buyers that are there, right? It's just like in anything. You're only limited by the buyers. So some stocks have much more fruitful options markets and much more active option markets than other stocks. And it also is a timely thing. So, you got to remember that sometimes there's more active activity and volatility in the market than other times. So then generally with volatility comes more action.
I will when the recording is done and kind of my computer does its thing, whatever it calls it after a Zoom ends, and then it converts it to a file, then I'll post it in like the Facebook group and send it out to people if you want the recording.
I've got my notebook here, guys, just so I can have Teresa reach out to you personally so we can get on as soon as tomorrow. Put a number 1 in the chat if you're getting rolling with us so I can write your name down so I can etch out some time tomorrow on your schedule to sit down with you. Put a number 1 in the chat if you're getting rolling with us, and I will write down your name. Who's getting rolling with us?
Laurent, yes, you do use the link that shows up in your dashboard to send somebody your referral link. That yes.
All right. Well, Teresa, thanks for having me on. If somebody doesn't look like any of them are, or they're shy, but have them reach out. And of course, if you're already members, you have that link too. You can always book a call with me. So hopefully you do. And yeah, really excited to continue working with you guys. I've never done it like this, so I've been busier than ever. As you guys know, I charge $1,500 an hour. So I've never done it like this. I've never done it where when you're a member, you get that for free. So, think about it like that: $1,500 an hour or $185 a month for unlimited calls. So with that said, I will see you guys on tomorrow's live room. I'll let Teresa take back over. Thanks for having as always. And I'm excited. Let's keep making some money. See you guys.
Thanks, Patrick. Have a good night. All right, guys. Thank you so much for hopping on tonight. If you guys have any questions, obviously reach out to me and get your questions answered, or whoever invited you tonight, and we can get your questions answered or get us connected. If you don't know me personally. And yeah, we'll go from there. Hopefully you guys all have a good night.